Hello, hello. Good morning. Welcome to another ES Futures Trading stream. Today is Thursday, July 18. It is 9:25 a.m. I am highlighting my last answer from yesterday. I want to check how this. Oh, look at this low, almost to the tick. This pullback we have here. We have an overnight inventory that's mostly long. Let's check Nasdaq. 2598 is settled. 20. My bad. That's from yesterday. Wednesday last is 19997. Huh. Nasdaq is back to the 20,000. Oh, now inventory also is 100% short there. I mean long. Alright, I have it here. What's going on with bonds? This is the bonds, the opening inside day. Oh. Big Tech was whacked yesterday. Oh, this is cool. Look at this. It's attempting a recovery. We had some volume coming yesterday. Not much. About 16%, 10 to 15% higher. Not much really for the magnitude of the break. But this is the volume that we should have normally to call it a market. You know, around 4 or above 4 millions. Gold making new all-time highs. We are just less than a minute from the opening. Let's see what this. How the bigs a little bit higher, 14. Very low actually. All right, market is open. Market is opening pretty close around the center. It's opening inside previous range. Some advertisement for chop. Let's see if the market gave us a counteraction to overnight inventory. Now, this area here is my support, my intraday support level. We have significant blocks here yesterday. Right at the close, we have 8,000. When I start to see this, when I see this kind of trading before the closing, there is something usually comes after that. Usually it's to the upside. I say usually outside to the upside, but I'm not going to, if I claim that I know what's going to happen, I will be just as crazy as any other one that follows price, because nobody knows what's going to happen. Nobody. Nasdaq is opening right at the center of yesterday's range as well. This area here, the 56.45, it was short-term support resistance yesterday. They're pretty significant that trade has happened around this area. And that's why I highlight the support resistance. In the bigger pictures, show us, a range, 7-day range now, 7-day range with a very, very questionable low down here, down here. This low here has really low odds, or have good odds of being taken. Now extension below this is another thing, right? And this is the next one here to me. This one too, because it's a weekly low. This level here sign as a change, not just in the daily time frame, but also in the weekly time frame. Notice where this high is. We have a weak level up here from yesterday, mechanical level, right? Both from this high, from previous period high. And now we have another one that is adding to these two here, which will be this one and this one here. So we have 4 highs, a cluster of 4 highs here. Doesn't have to be taken or repaired today, but just remember it is there. And also selling from hardback. Okay, we have very low volume, brother, very low volume. Opening volume 62, that's the lowest in the last 10 days. Probably an expectation of earnings. Today we have Netflix after the close. As you can see, I am not in a hurry to do anything today. These kind of openings are have good odds. They have chop. The closer the market opens to the center of previous day range, the higher they also chop. Also rotation also increases here. The exception happens when the market gets out of this range in the first period, either to the upside, signaling strength, or to the downside, signaling weakness. Now check the high, right? We have checked the high, right, at halfback. And now let's check the low. One tick from POC, one tick from halfback. That gives me an idea who is doing this trade. What kind of trading is going on here? What kind of trades we have here? Because one of the first things that I want to know, what I try to know is what the market is doing, right? Or what the market is trying to do. Second, who is behind that? Who is doing what the market is trying to do? When I can see this, highs, lows, buys, sells coming from these mechanical references, all that high, the odds that the short-term traders are behind this are high. Bigger time frame traders, bigger time frame participants can be seen. This is counterintuitive, right? They make the presence not notice it when you actually cannot see them. that's that's the ironic part of this. When you don't see any kind of trading coming from short-term reference, usually that's when some bigger time frames participants are in the market. I don't have anything here right now. We have to understand this too. Now there will be days that where I'm not going to do anything. Or at least I will have that bias, right? I will not do anything today. Of course, as soon as I say something like that, I find myself in a trade. Just a second, please. I am really annoyed with these spam calls. They are coming all the time now. Really annoying. Okay, very quiet market. Very quiet market. Nasdaq as well. It's inside. Nasdaq hasn't reached the. Yesterday's POC yet. Pretty close to be. Oh, by the way, Nasdaq has. Let's move this in here. Nasdaq has held back at POC, and yesterday's POC overnight held back overnight POC right there, right? Right where yesterday's POC is. No, and you can't be. You cannot have a more visible reference than this. Let's see some buying comes here. This is just so markets are irrational. Humans, because humans are irrational, but predictable irrational. How counterintuitive, counterintuitive that thought is. That phrase is from Dan Ariely. Has been taken for by many people. Nicholas Taleb also talks a lot about that. He has a book, Predictable Rational, I believe. Oh, that's Dan Ariely's book. Nicholas Taleb has one that's called Fooled by Randomness, but he talks about how irrational markets are, and how predictable irrational. He also called that. And let's put Nasdaq here too. I don't have any intentions right now to do anything here. As I say again, for some reason, people love Nasdaq. People love Nasdaq, right? The movements in Nasdaq have a tendency to extend. That's why if you do any trades here, you have to give Nasdaq more room. Still, this has been, the ES has been bought from POC, sold from Halbach. Oh, there was an extension here, a little bit of extension. All right, these highs, I would consider technically these two highs are repaired now. What about Nasdaq? Let's check Nasdaq. What do we have here from yesterday? No, actually, there's nothing here. Now, let's see if Nasdaq can fingerprint its way out of yesterday's range. Notice how yesterday's, how the overnight low is below yesterday's low, which, by the way, is a questionable one. Okay, stopping at last. I'm going to be cutting the stream today at 10. I got an appointment at 11. But let's see what the market has. All right, the market is right on this, has been bought. This is something. This is support from yesterday, okay? And we have this 43, 41. I want to see what the market does relative to if the market is both from these numbers, or it has some downside acceleration once this area is taken. And this may happen if not, if it doesn't happen right now, the first period, it may happen the second or third period. If the market does too much back and forth from these levels, it kind of like lose significance. Right now we're having something here, right from this thing. Okay? So this is a better low, but still, remember, we are still inside previous range. There's a lot of chop. Yes, you are seeing this, right? You're seeing the chop rotation the market is the chop that we are having now. You may say, or you may think, oh, I would have been short here. I would have won. I would have like 10, 20, 40 points now. I would be short. I wish I was short, just above the halfback. I wish I was long, just below POC. To give the market time. It is hard. This is how trading is. How traders get crazy, very excited, especially short-term traders, very excited at the opening. Also, my time frame, I don't check 5 minutes 5 minutes bars. I know that most traders do that. Most, at least retail short-term traders do that. Tom Hugard has a book, really nice book. I find it like really interesting. I bet you have heard from him as well. That's the bigger loser wins in these games, in this business. The wins are not the problem in this business. The losses are. Because when we win, we deal with these feelings. We feel very comfortable, right? We can have our wins. Oh, look at this. Look at this. One here. This is very weird having something like that. Okay. Oh, another one here. Another single. Huh. All right, this remains. I was talking about the losses and wins, right? When we lose, it's kind of like hard to accept the losses. We don't want to close a trade. We think the market is going to come back in the opposite direction. It's come back for us. Just like here, for example, right? I could have been long here, right here, POC, but the market, overreached here. Oh, and I close it. Oh, I wish I had closed. My trade would be winning here, but that's not a strategy. You don't have nothing there, actually. You don't have anything in which you base your trade. Because if you were long here, this is a mechanical reference. Everybody can see this. And the trade here is one tick below, one tick below POC could be, I will take this one rather than any of these two. One tick below and I'm down. And the market didn't go one tick below. The market extended like 40 points here, right? But accepting this, right? Accepting your loss, cutting your loss here instead of cutting down here, that's the problem. That's the issue. How you deal with that is because you don't have a strategy. And as soon as the market comes back up here, I say, oh, my trade is finally winning. If it had come back all the way up to here, it can go all the way up to here, to this halfback or to this node volume. And now again it comes down. Oh boy! Next time it comes back to my position, I am going to close. Those are the thoughts. That kind of thinking, believe it or not, is the most natural way. It's the most human way of thinking. A normal human, doesn't make it in trading. We have to do something here. First we have to realize how our thinking is. We have a tendency as humans, and on top of that, personally we may have slightly different things, very particular nuances to ourselves, that belongs to each one. The trade didn't work here. You got something here, it just didn't work. Cut it short, get out. I wouldn't buy, sell here, especially at the opening, especially right now. When we have an inside day with high also rotation and chop. Now we are 7 minutes before the opening period ends. Most of the overnight, this is a popular trade. Most of the overnight has been retraced. We have settled. Most of the overnight inventory was long, and this can be. Look at this. Look the amount of trade that we have here. Most of this inventory has been rebalanced. Can you see? This can be misleading too. Is this a counteraction to overnight inventory? Look at the volume we have. Very low. The lowest of the past 10 days. We have 7 minutes to go. We may end. I highly doubt that this is going to be higher than yesterday. Most likely it's going to be, we're going to have something like this, very low volume. Very low volume today. My bad, sorry. Which market do you trade? You trade Nasdaq, you trade ES, Russell, Dow, whatever it is. Each has its own nuances. I find it like very, this for me, right? When I trade both, I may have some wins, sometimes big wins, but there are, I have a tendency to lose them or get flat or break even quite often. And that's why I try to stick to the ES. It's a more efficient market. Notice how this taper is. Right? Now, I had these levels from yesterday. I'm not saying something is going to happen, but when I see the market doing things around this, it's the market that gives validity to this one. It's not the opposite. It's not the other way around. I don't trade from this because just because. I trade, one may have these areas to see, to check the market here. Let me show you an example. I had this here. Yeah, I have 6 and 3 here. This is 1 and 8. If I remember well, I believe this was from this day or this day. I don't remember when I had this. It probably was this or this. Okay, it was here. And this other one was from this one. And the market was doing, you know, I guess it was from this day. The market was paying close attention to this one. I guess it was this and this. I don't remember. I will lie if I say I remember where it came from. But it was just stopping. Just like now, for example, just like now, has stopped right here, right? I may disregard this support area, this specific level, and take this area as a reference. Notice that I also have settle. But settle is pretty close. Last is actually to a tick here. When I saw the market buying, selling from these levels, that's why I make the decision to, I want to use these levels as reference. I'm going to be short below this, or I'm going to be long above this. Or this could be the potential destination of this trade. Because notice also what we have here. What we have here is a 7-day range. 1, 2, 3, 4, 5, 6, 7, 8 now. This level here, that coincides with this reference here, is exponentially weak, super weak. Very low odds that this is going to remain for long. This is going to be a lasting low. Now, if I see something like this, if I see something like that, this area is going to be super, super, super weak and be good also being retraced. Notice how I don't disregard or discard the potential movement. If there is something here, what we are applying here is balance guidelines. If one side of the range is not taken, the opposite side of the range becomes the potential destination of that trade. And notice how once the market took this high, this range was a 5-day range at the time, the trade to the opposite side of the range has been completed. We have that one. High taking, look above, explore, was rejected, higher pressure was rejected, and now let's take. And this trade has been completed. Now balance guidelines apply here. Could be look below and fail, just like this, with look above and fail, or we can have downside continuation. Also, we have two distributions here. We have a 7-day range here and a 10-day range down here with this part as a single pinch, and that's in the daily time frame. Just like in here, we may have two distributions here, right? These are single. These are intraday, right? Once the market comes back inside, if it ever does that, the opposite becomes the potential destination. It is not a double distribution. It looks like, right? But it is not. But I am using this just as an example. Now the second period has opened. Nasdaq has not taken the daily low. This low was not taken. The bond market is behaving. There's no weird things going on there. Oh, look at this! Look at this! Look at this! Come on, man! This is pretty dangerous here. Look at this! The 30 all the way from here. What about the indices? Range, inside day. Notice Nasdaq, what we have here. We talk about these two, yesterday. The potential here for something like this, right? Does it look like that? Yeah, but look at this. And look at this advance here. This is support. The Nasdaq also has something very interesting. Up to yesterday, I have this line here. I have just extended this one to the right. This is resistance here, support here, support. This may be support here. Some range there can happen here as well. This is Russell, this is the Dow. Also, the dollar is weakening, and this is, weakening dollar favors those weakening small cap companies. Alright, it is 10:05. Unless you have any questions. Hey Dix, what's up? Sorry man, I've just... Dix, by the way, 1. All right. I'm going to be calling, unless you have any questions, I'm going to be calling it a day. Sorry, I just replying to you, Dix. Sometimes I just so focus on the market. All right. This movement, I would associate this movement to the counter-reaction to overnight inventory. Now we have inside value in Nasdaq and slightly higher. Developing value is